Hey guys, welcome back. In this video, we are talking about the squeeze pattern confirmed, the $32 target for AMC, the gamma squeeze, and many more in this video. First, we're taking a look at this. So yesterday we showed this picture. Now, essentially, it's taking a look at the comparison between the two times Adam Aaron posted to the moon. And we talked about how it tracks almost identical to the price movement of when Adam Aaron first said it in 2021. You can see the purple line being 2021 and then the blue line being 2026. And you can see how similar this movement was. And we talked about how if you then drag that out, this was the line, this was the movement of AMC throughout the next few days. So once again, purple being 2021, and you can see how we're tracking this movement right now. This is both two times after Adam Aaron posted to the moon. So this is something we're keeping a close eye to because it definitely is an interesting piece of data. One of the things we look at on this channel has been historical data because it has shown us a lot of things. And this being one of them, especially how it's following the movement, I definitely think there's a lot to be looking out for. So far, we're following the movement. And so if things is obviously going to follow or kind of correlate to this, then we're going to be seeing some major movements for AMC soon. Now, another piece of data I wanted to show on top of this, which is kind of further confirming the squeeze and everything that we've been talking about, is this. When the stock is bleeding $1 billion a year and basically mirrors GME price action on a 6 to 12 month delay with the same kind of volatility, that's probably not a coincidence. The correlation is likely hiding somewhere inside toxic swap ownership structures. So this is another comparison between GME and Avis this time. Take a symbol as CAR. And we talked about how CAR recently experienced the short squeeze. Now, the thing that's interesting about this is that if you take a look at the movement of the chart, you see almost how similar, once again, it is to the movement of GME. We talk about the spikes, then we talked about kind of the decline, and then even in previous times. So there's a lag between the two here, but when you take a look at actually what's happening within the chart, yes, it's not on that same level, but even the movements were the same. The very fact that even the volatility, despite not being at the same percentage, but the volatility, the movement, the ups and downs are closely tracking each other, that should already tell you what's going on. The resemblance in these charts, I think, is already loud enough to tell us everything that needs to be told. And we knew that there were multiple stocks that were being shorted. The ones who have been heavily shorted at the forefront is, of course, AMC and GME. But you can already see how the other stocks that were manipulated and suppressed, how they follow the movement. And one of the reasons for why I talked about how the reason why Avis is able to short squeeze whilst being one of the stocks that faced the same thing back in 2021 is because it just hasn't faced as much manipulation as AMC and GME. Yes, it's been naked shorted. Yes, there are synthetics created, but nowhere near to the scale of AMC and GME. Is why we see it track the movement and why we see it squeeze first. And so what's likely is that what's then going to follow are going to be stocks like GME and AMC from the two pieces of data we've seen. And this is why I'm saying we look at historical data because it tells a lot of stories. And this right here is already confirming about the stocks that were manipulated back in the past were in the same baskets. And as we now see weakening in the collateral structures of these hedge funds, we're seeing them take off. And very soon it will be AMC, it would be GME, and that's what we're looking at. And even when taking a look at the fundamental side, and this applies to both AMC and GME, but where Avis were able to squeeze over 700% after losing $995 million in 2025 and carrying over $25 billion in debt, imagine how hard a profitable company with billions in cash can squeeze. So one of the things that people obviously talked about for, in this case would be for AMC, is the debt issue. And again, we've always acknowledged that yes, AMC has a debt issue. It's not something that will bankrupt the company, but it is something that if solved, it will definitely be good. So the problem with this is that people who kept on attacking this debt problem has no problem with the fact that Avis was able to short squeeze with a 25 billion debt. And so that should already show how hypocritical these haters are. but also show the possibility of AMC. And the same applies for GME as well. And so when we talk about the improving of fundamentals of the earnings sheets of AMC going into the future, you can understand how that's extremely worrying for the short sellers. And this is why they've tried their best to prevent AMC from raising any money to solve their debt issue. Because AMC raising money, one of the ultimate goals is to solve the debt issue. And it's because they've realized if a company with a 25 billion debt issues was able to short squeeze, then how well would AMC do? And that's what they're trying to prevent. And this really just confirms that. And especially with how AMC has been performing recently, you're already seeing how people are changing their views. You're seeing how suddenly people are all scrambling towards AMC's side. You can see AMC stock size already updated on the AMC. The narrative will change after its way up, so you can be exit liquidity. Now, this needs to be taken from multiple perspectives, but let's talk about some in a second. Firstly, if you take a look at this, essentially what they talk about is how the forecast for AMC is positive. The average analyst price target currently is 3.54, representing a 107% increase, with the highest analyst price target being 6.8 and the lowest being 0.29. Now, 0.29 is obviously ridiculous, but even then, the 6.8 I still think is ridiculous. But nevertheless, we can move on. And then if you can see here, when we talk about the 12-month AMC price target, you can see the average given by the model indicated is $32, with the high being 65. So let's talk about the different perspectives. First, let's talk about why I think 6.8 is ridiculous. Because when you talk about the sentiment, when you talk about what is going on for AMC, when you talk about the shorts needing to cover, then people buying into AMC, you understand that 6.8 is something that can be touched within an instant, and it will go way higher than that. That's why I think it's ridiculous. Now, I'm sure you don't need me to talk about why I think 0.29 is ridiculous, but I'm pretty sure you understand the reasoning behind that. So when we take a look at what the algorithm is predicting in terms of the average of being 32, it's obviously a very good place to start. You can see a 18,000% upside. However, one of the things that we have to watch out for is we talked about the tactics being used in the past before. They try and give a target for AMC because if we are able to see AMC move that much, then it creates that sense of this is the top of AMC when realistically is not. An example given would be that because they're given a target of 32, now this isn't to say that this is the tactic used by them, but we've seen it done with other companies. But if they're given a target of 32 and we see AMC go to 32, now if no one sells, AMC can go to 300, 3,000. But because everyone then thought that 32 was the price target and we've already seen an 18x and you start selling, that's exactly how you let the shorts get out. Now, once again, this is not me telling you where your exit price is, where your squeeze price should be. This should be decided up to you. I'm just talking about a tactic that has been used in the past by these market makers to make people sell early so that they can prevent any losses that is even bigger. And we're also seeing other narratives flipping for AMC as well. We can see another company which raises the AMC price target. And typically these lower price targets are the tactics being used. This one here, I do think is that probably their algorithms gave them that. And so it wasn't a tactic, but you can see raising from 1.5 to 2. So yes, they acknowledge that AMC should go up, but the fact that it's only to $2, it feels like they want to prevent people from then thinking AMC should be worth anything more than $2, meaning that the moment it gets to $2, people start selling because they think that, okay, we've reached the price target now. We reached the top, so we should start selling. And there's a reason for this. If you take a look at here, majority of the AMC call options are at $2 for this week expiry with 60,000 plus contract and $10 for January 2027 $60,000 contract, 60,000 plus contract. Now, AMC might gamma squeeze out $2 due to majority of contract expiring around $2. We get over 2 every week that market maker has to buy AMC on the open market on the lit. So this is why we have so much open interest right now. We have so much volume at the $2 calls that if we do see AMC not only go to $2, but then go above it, that's when they're going to start panicking. That's when they will have to prevent AMC from going higher because they've realized that the gamma squeeze will happen, that they will have to buy so much AMC shares that, again, this will be on the lit market. And so that's what they are trying to prevent. Firstly, buying AMC. Secondly, from buying AMC on the lit market. So you can understand why they're trying to give these $2 targets to obviously prevent these contracts from squeezing them and putting them in a bad position. Another big thing that I want to talk about quickly is the potential of a very, very secretive but lucrative partnership that could be happening. And this is what we're looking at between David Ellison and Adam Aron. And people are obviously speculating around this, where they talk about how potentially what we can see is a private under the table of commitments beyond the public 45, 90-day windows, where they're likely committed to guarantee minimum runs and with priority for AMC. Now, this is something because of, if you want to take a look at this, and again, I highly suggest you guys take a look, it's because of Adam Aron's support towards the Paramount Skydiv's bid for Warner Bros. And it feels like this could end in something that's extremely positive, not only just for the movie industry, but one of the most direct benefits would be solely for AMC. And if you take a look at him, Warner Bros. Shareholders vote overwhelmingly to approve the $110 billion merger with Paramount. So we're definitely looking at something major that could be happening, especially when we talk about the fundamentals. And earlier, we've already talked about how important fundamentals is. And you can even see here, have you ever wondered why AMC Theaters re-release so many great movies available on streaming and physical media? Now, this is a strategy tied to scale and economics because they have far more screens than on competing exhibitors. This means that AMC has more flexibility to dedicate smaller auditoriums on or off-peak slots to re-release, even including AMC screen unseen without hurting new releases at the box office. So this is the ability that AMC does, that they do have and that they are implementing. And there's a big reason for this because firstly, if you take a look at this, in terms of the cinema theater chain, you can see for the screens, AMC has 10,000 while Cinemark only has 5,600. We are almost double the amount of screens Cinemark has. So you can understand how powerful we are. But one of the biggest things that we then can understand from this is that the biggest movie chain in the world versus Cinemark, which is number 4 on the list. Same industry, same product, not the same popcorn and food, but somehow Cinemark share price is almost $29 per share, while AMC share price is under 1.7. Now, one of the things that I have always talked about is you shouldn't just look at the numerical value of the share price because you have to include market cap. But nevertheless, I do believe that AMC's market cap should be anyway bigger than that of Cinemark's. And especially with what we talked about earlier with where AMC price target can go, yes, I do believe it's extremely undervalued, especially when you compare with our competitors and you understand that we have more screens than them. We are able to utilize more tactics like we talked about here. And this is how we're able to make more revenue. And when profitability starts, you will see how well AMC will do. And this is why I think that AMC just wouldn't stop at why earlier I said AMC will breeze past 6.8, why AMC just won't stop at the price target here given of 32 and not even 65. The reason for this is because you can see this picture. And whilst this is a meme you'll see multiple times, but I think it really sums up AMC. Now, this isn't to say that no one's buying AMC at $1. The ape community is extremely strong. But what we have to realize is that the ones who are committed to buying AMC at $1 will be here. But if we do see AMC go towards $60, you're going to see 10 times the amount of more investors that will be coming in. There won't be apes, but there will be people who are FOMOing. And that's why I believe that AMC will easily go past $60. So whilst this picture doesn't realistically kind of depict the current situation for AMC right now, because the line, there definitely should be a line for $1, it will definitely show you in terms of if AMC were to reach $60 anytime soon, and again, it very well could do, we are going to be seeing a lot more people lining up and buying shares that would then boost the price up even higher. Another thing on top of this with the fundamentals, we're seeing with Adam Aron talking about the Michael Jackson movie, and this is how we know that he's obviously trying to take advantage of the current the box office slate and really capitalize on this whole opportunity. And you can see the difference between 2026 and all years prior are re-releases. AMC typically sat with empty theaters while showing off movies with little interest took up all the screens until the next big anticipated motion picture hit the theaters. They have now taken advantage of the box office revival, the new movie theaters are cool again movement, and showcase re-release which are filling up theaters. Then going back to what we talked about here, understanding how many screens AMC has, you can see how well they're capitalizing after this and why we talk about the revenue is going to skyrocket, the profitability is going to skyrocket, and we're going to see how they're going to be paying off debt and fundamentally are going to improve. Now, furthermore is that imagine the market pricing dilution around 0.9 to 1.2 for 150 million, but the shares were sold above 150 in reality. That means lower dilution impact on AMC. So once the ATM completion drops, should lose a major narrative. Capital raised at a better price. And now we talked about this, especially with how the recent raise in AMC's price, you have to remember now they're able to sell less shares, but raise the same amount of money. And this will be extremely positive for AMC because one of the points that people were trying to use was not just the fact AMC was diluting, but they were diluting a lot of shares. Now, I've already said that that is not a problem, but to really shut the haters up, if AMC was then able to dilute less, but raise the same amount of money, then that is just goes on to talk about how positive of a news that is and how AMC is able to use this and grow in the future. And then what we're also looking at right now, as we talk about earlier in the video, we talk about the swaps basket, as we talk about how they are worried about everything, how we're seeing the stock squeeze. It's because we're seeing this is for GME as well, where we saw it explode through 25, but then pull back and sit in green. Now, what we're looking at right now is because people are buying. There is extreme pressure and we're seeing this, but some institutions don't want it to see it break because they're obviously afraid of what's going on. Now, one of the big reasons for why potentially we're seeing some positivities around this is because firstly, Michael Burry has bought more GME at the share. He views 25.56 as a fair price. Now, this is already very positive and just talked about that we're still looking at an undervaluation for GME as well. But the very fact we're seeing everything that's ongoing right now, it goes to show where AMC and GME should be going to. We're also looking at the $30 strike having 78,000 open interest. And now this feels like the one time where Rowan Kitty returned back in 2024 and people are thinking that this is him making a return again, especially with the recent news that we talked about recently. This could be a big possibility. And if this were to be the case, then you can imagine another big set of volatility coming through. Another big thing I want to quickly talk about is the notional amount of JP Morgan's derivatives is 56 trillion. Now, they wrote more contracts with a value that's worth more than the stock market. So this is so many naked short positions that's written on the entire stock market. And this is obviously becoming very, very worrying. The reason why I say this is because we're seeing Swiss hitting UBS with a 20 billion capital bomb, where they need to add up to an extra capital requirement of around $20 billion. So we're talking about the trillion positions that these banks have. We're talking about the over leverage. And now UBS is seemingly the first bank to be then hit with the fact that they are over leveraged and they need to meet the margin. And so we're literally looking at a margin call. Now, the difference is that they obviously get a longer time to try and post more margin, but the very fact they are being margin called should already show you the liquidity issue that's in the market. And then when you take a look at the fact we're seeing the new low on the reverse repo at 0.114, you start to understand what is going on in the market and you start to understand why we talk about the squeezes coming so soon. As always, this is financial advice and I'll catch you guys next time.